Okay guys, it's been a little while since I've made an educational video, so I wanted to make a video on a topic which I've discussed before, but it's typically implemented on higher time frames. You'll see supply and demand zones drawn on like the hourly or the daily chart because we like to see areas where price historically will, face either some buying pressure or demand zone with buyers stepping in, or the inverse in a supply zone where sellers step in. So the best way to draw these supply and demand zones is look for a pivot. And these pivots will come with, a sudden price shift, right? Sudden trend shift, and then you'll see typically a pivot is preceded by a wick of some sort, which indicates, buyers stepping in. If it's at the bottom wick, buyers stepping in and pushing price up before a reversal, and then at the inverse side, if we have a peak, you see a selling wick pushing price down as buyers attempted to push it, to a higher high, and then sellers brought it down. So I'll show you how I draw these zones. We're going to have a completely bare chart. All we have is our price action and our volume, and I'll show you how I draw these. And what's really important is you can see how price respects these throughout the day, and you can actually use these zones to anticipate larger moves as well as stay out of choppy areas. So if we're chopping between two zones, you can say I'm going to wait for a breakout, retest, and then play the upside continuation, as opposed to getting chopped up and having theta decay your contracts. So you can see pre-market move, this nice sustained buying move that pushed us all the way up here. Here is our high, and then we have a sharp pivot to the downside. So we can take a look at where we decided to pivot. So we take a look at the high. That is a candle that formed there with a pretty significant wick. So I draw my zones from the top of the candle wick to the candle body, and then I extend them to the end of the day. So that's the first zone. So obviously we never retrace back to this area, but if we did retrace back to this area, I would expect some resistance and a potential, continuation of the downside if we can't break through. And then if we break above and close above this supply zone here, we could expect a move to the upside. So let's take a look at what happened here. We pushed to the downside. We had a small bounce in the form of this. You can say it's kind of like a bearish pennant, bear flag, whatever you want to call it. Right? So we had this push up before we dumped again. And so what we can do is when we had that slight pivot to the upside here, which you can see we did have a significant little push to the upside here. We bottomed out at 445 and we retraced back to 445.79, so a nice 80-cent move. So we can take a look at where this began, right? The bottom of this candle body, the bottom of that candle wick, draw it all the way up to the next candle body and extend to the end of the day. Now you can already see what's happening here, and I'll get to that, but let me continue to the next area that I'm going to draw here. So again, you can see here we did not really have a significant push up. We did have this candle wick here, but all we did was retrace a little bit and then continue the downside. What I really want to focus on here is where we had this tweezer bottom, where we did have two continuous wicks and buyers stepped in, and then we got a nice significant move to the upside where we actually retraced back into this supply zone. So it's previously demand, flipped to supply. So I'm going to go ahead and draw my second zone here, starting from the bottom of the candle wick and extending all the way across here. So now we have two zones that are drawn, and this gives us a pretty good idea of what's happening, but we can actually draw a third supply and demand zone if you want to do that here. But I'll talk about what happened in between these. So you can see we had this demand zone formed, we break through, we formed this second demand zone up here, and then we pull back all the way up to this area. Now look what happened. We failed to close above this zone that was formed previously. We even have this nice, tweezer top rejection. We try again, and then we get this little inverted hammer rejection, but you can see we failed to close above this zone. This zone really did act as strong resistance through the day. You can see we actually had a nice upward trend here, right? Kind of like a rising channel, and then we broke that, and then we just kind of continued down from there. So that's pretty easy to see. And what we can do is we can observe another reversal point, right? If we take a look at here where we, finally decided to bounce again, but then rejected and pushed all the way down to the demand zone. Look what happened when we hit this demand zone, right? Buyer stepped in, and then we had a nice short-term reversal before we dumped again. So it's important. You might be thinking, how can we utilize these zones? What do they indicate? Well, if you were to enter a short position here, you could use this zone as your stop loss, and you could target this zone as you make this zone your target. Personally, I don't trade that long. I mean, if you take a look at how long it took to get there, this was probably like an hour and a half trade. That's a very long trade for me if I'm trading 0 DTEs. And not to mention, your price could have reversed here and went up there. We don't know, right? So I don't like to hold a position that long, but you can see that it's very useful to have these zones because you could have taken your profit right here, and on the other side you could have actually longed this zone, and I'll show you where you would have taken your next target. So you can see here we have a push up, pivot, and reversal to this next zone. So now we do the same procedure as before. We take a look at the very top of the candle wick and then draw that to the next candle body, and what do you know? Where we reversed here, we rejected at the next overhead zone. So here we rejected this supply zone, which was already a supply zone here, right? So we retraced, rejected, and then continued to the downside. So you could have longed here, taken your stop below this zone, and you could have made your target there. So you can see that these zones are not arbitrary. When we have these sharp pivots, and they hold significance throughout the rest of the day, especially on a day where we chop around like this, you know, these zones are respected more on low volume consolidation. And as you can see here, this is the first time we actually close within this zone. I would not long into this zone, right? But I wouldn't go short either. Now, let's see, I did have a sell signal, I think, that triggered up here on this bear flag, so I did take this down here. But what you can see is we actually retraced to the top of this zone on the next candle, rejected, and then we dumped. So that is a good way of analyzing intraday supply and demand on yesterday's chart. So let's take a look at today's chart because this is more applicable. So let's use the same approach and the same methodology. You can see here, right, we had a push to the upside and then a sharp reversal to the downside. We didn't have much of a wick here, but if we take a look there, we do the same procedure. Look at that. This is a triple top rejection. So the first time we form this zone, pull back again, reject, pull back again, reject. So we reject this zone 3 times. So if you knew we had this zone here, if you drew this into your chart, what you could have done is maybe even drawn your own little zone right here, right? And then you could have maybe scalped this, right? Rejection of this zone. So now we target the next zone down with a stop above this zone. We hit our target. You can see buyer step in, again, reverse to this upside target right here. So this is where you would take your profits if you're long, and this is where you would want to go short when we confirm the rejection, again to the next zone. And then you can see once we close below the zone, then we get some strong downward continuation. So let's take a look at where else we can draw a zone. So we have a push up here, right, and then a sharp reversal of the downside. If you want, you can draw a zone from this candle, extend it all the way across. It's a much smaller zone, right? Same idea. Look what happens. The same area is again retested, rejected 3 times, and then no surprise, we dump to the downside. And again, what can we do? The same thing. This is a pivot to the upside where we have this big candle. Where we go, draw our zone, and look at that. Where did we bounce here? Where did we bounce here? Where did we bounce here? It's the same demand zone that was drawn intraday. Now, here's another neat thing that we can observe, right? If you were to take this breakout of this zone, you might be confused. What is this, a fake breakout? I only got, you know, X amount of cents here, maybe 10-15% of my contract before I got dumped on. Well, if we actually extend this zone from earlier all the way across, right? What do we see? It's no surprise we rejected here, right? This is exactly where we had this zone right here. So once you understand supply and demand, especially intraday supply and demand, then you can really understand what's happening intraday, and then couple this with, you know, other indicators where I have my algo. Now I have even more conviction. If I'm trying to go long, if my algo signals me to go long here, then I have a target right there. If it signals me to go short here, now I have a target here. So draw these throughout the day, and they can really help your trading. It can help you understand why price is pivoting, why things are happening, where is this support and resistance that's seemingly out of nowhere. It all kind of, you can trace it back to intraday supply and demand. So very helpful, especially if you're scalping. And if you guys like educational videos like this, let me know and I'll do some more.